The world has been rattled by an epoch-making crisis, which has caused significant harm, shuttered businesses, put livelihoods at risk, and protectionist reactions have cast doubts about the future of globalization. As we start rebuilding, we need to seize this opportunity to build a better tomorrow, one which achieves a more balanced, fair, and ultimately a more sustainable world. Globalization has helped raise living standards around the world in recent decades, and will continue to be vital for the future. Finance will continue to play a central role in international business. Making sure capital is available when needed will be crucial in shaping the global post-COVID economic recovery. Investors will provide the funds required to help companies around the world stimulate growth and create jobs. They will also help bring about the transition of our economies to a more sustainable future. Luxembourg will play its part. Our unique expertise in international finance connects investors with projects. Our ecosystem, our toolbox of investment vehicles, and our stability offer an ideal platform for financial services to operate on a worldwide scale. Luxembourg contributes to building a better, stronger, more open, and more sustainable tomorrow.
Welcome to Focus On, bringing together financial industry experts of different horizons, sharing and discussing their insights.
Ladies and gentlemen, welcome to our Focus on Middle East. My name is Philipp von Restorff, Deputy CEO of Luxembourg for Finance. Luxembourg is a long-standing partner to the financial communities of Muslim countries in Asia and the Middle East. To these markets, the Grand Duchy offers financial services that can be designed and delivered to conventional or Islamic financial standards. This makes Luxembourg an ideal base from which to offer Sharia-compliant products and services. As the chill of winter sets in across Europe, we turn to the Middle East for this Focus On event to discuss topics not only of matter to this region, but to the whole global community. Dr. Sami Al-Suwailem, Acting Director General of the Islamic Development Institute, will provide the keynote speech on the recent development of Islamic and sustainable finance. The first panel will then delve into the convergence between Islamic and sustainable finance, as well as the future of Islamic capital markets. The second panel will discuss Luxembourg's role as a long-standing European partner for Islamic financial institutions operating globally. Finally, His Excellency Robert Lauer, Luxembourg Ambassador to the UAE, will provide the closing remarks and touch upon the Dubai Expo 2020. I wish you an interesting session. Dr. Sami Al-Suwailem, the floor is yours.
Bismillah ar-Rahman ar-Rahim. Distinguished guests, ladies and gentlemen, brothers and sisters, Assalamu alaikum wa rahmatullahi wa barakatuh. I am honored today to participate in this important event addressing the convergence of Islamic and sustainable finance. The Islamic financial industry is increasingly adopting sustainable development goals. Green and sustainable sukuk are gradually becoming mainstream. The total size of green and sustainable sukuk currently is estimated to be around 15 billion US dollars, more than 1/3 of which was issued by the Islamic Development Bank. It started in 2017 when Tadao Energy in Malaysia issued the first ever green sukuk. This was a culmination of the close collaboration between the World Bank Bank Negara, and the Securities Commission of Malaysia. In early 2019, the Islamic Development Bank formulated its sustainable finance framework, and in November of that year, the bank issued the first AAA-rated green sukuk, raising 1 billion euros. In June 2020, the bank issued the first AAA-rated sustainability sukuk, raising 1.5 billion US dollars to assist its member countries in tackling the aftermath of the global pandemic triggered by COVID-19. Subsequently, in March 2021, the bank issued 2.5 billion US dollars of sustainability sukuk for financing green and social development projects that are eligible under its sustainable finance framework. At the COP25 summit in Madrid in 2020, the bank announced that by 2025, at least 35% of the bank's operations approvals will be dedicated for climate finance. To achieve this goal, the bank is increasing its investments in renewable energy, climate-resilient agriculture, urban, water, and transport systems. Ladies and gentlemen, Islamic finance integrates universal moral values with economic activities. This integration is essential to achieve sustainable economic progress and to overcome the climate crisis the world is facing today. To see this, we should note that the climate crisis has two dimensions, a time dimension and a space dimension. The time dimension extends over generations. The narrow perspective of giving substantial weight to present consumption encourages us to forget about the future to enjoy the current moment. When each generation follows the same strategy, it is almost certain that humanity will not survive the climate crisis. This is where moral values come to play. If we care enough about future generations, then we must act now to save humanity. Saving humanity is a decent Islamic value. The Holy Quran says, وَمَنْ أَحْيَاهَا فَكَأَنَّمَا أَحْيَا النَّاسَ جَمِيعًا. And whoever saves a life is as though he had saved all mankind. The space dimension of sustainability is reflected in the collective action it requires. Curbing the climate crisis is a form of a prisoner's dilemma game where cooperation is necessary to achieve optimal outcomes. However, in such circumstances, there is the incentive for the few to deviate from the group to win short-term gains at the expense of the larger community. If everyone follows the same strategy, everyone loses. Moral values, therefore, are necessary to balance self-interest versus group interest. In this context, it is enlightening to quote His Excellency Dr. Mohammed Al-Jasir, the chairman of the Islamic Development Bank Group, in a speech he delivered at Paris Peace Forum a couple of weeks ago. Quote, "We live on one planet. We cannot afford to take care of a segment of it and say the rest can take care of themselves. No, we either take care of ourselves together or we sink together." End quote. With this, I conclude these remarks. Thank you for listening. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Dr. Al-Suwaili, for this great introductory speech. Thank you for reminding us of the values you and Islamic Development Bank are standing for. but more importantly, thank you for the huge effort you are deploying in this sustainable development transition by issuing instruments for the benefit of everyone. Hello everybody, good morning, good afternoon, and salamu alaikum wa rahmatullahi ta'ala wa barakatuh, wherever you are. I would like first to thank Luxembourg for Finance for organizing this event, and thank you to the team who has put great effort in doing this. I'm very happy myself as we're going to focus on a region which I've been focusing for many years now, and more importantly, an industry, the Islamic finance industry, which I have been myself focused for the last 15 years. Our subject, as you have seen, is on the convergence between Islamic finance and the sustainable finance, and more concretely, the impact and the future for the Islamic capital markets. I think this is the right time to speak about the overlap between the Islamic finance industry and the sustainable development goals, the SDGs broadly speaking, social, green, transition, sustainable linked investments. As we have in the Islamic finance industry debating about the core principles of Islamic finance. And there has been that internal debate whether there was a real impact from the Islamic finance industry. Some were arguing that it was too much artificial, too much engineered to mimic conventional finance. Others really want to show the impact. So I think today we have an opportunity for the Islamic finance industry to demonstrate its real positioning, its real impact, and to link to the ESG industry by tapping into those huge flows of funds that are going to be directed to the investments which have a real impact, whether it's social, environment, people-based, nature-based. So this is not a new topic, but we keep trying to find answers to that. In order to dig into this great topic of convergence between Islamic finance and sustainable finance, I have the pleasure to have with me a panel of 4 experts. Here in Luxembourg, I have Chiara Caprioli, which is Senior Business Development Manager at Luxembourg Stock Exchange. And she has been one of the person behind the initiative of Luxembourg Green Exchange. Welcome, Chiara. From London, we have Fahmi Dabi. She's a partner at Norton Rose law firm. She has been well known to the Islamic finance industry for many years, working on the capital market, and especially Islamic capital market. And she's also the chair of the EMEA chair for Norton Rose. From Bahrain, we have Dr. Abdillah Belatik. Welcome, Dr. Abdillah. He's the secretary of CBAFI, Council for Islamic Bank and Financial Institution, based in Bahrain. And we have Bashar Al-Natour, who's global head of Islamic finance at Fitch Ratings. So, welcome. Thank you very much for making yourself available for this great panel. I have a first question before we enter into the subject of this convergence between Islamic finance and ESG. I would like first, for the benefit of everyone, to understand where do we stand in terms of Islamic finance industry, and what are we talking about here? Bashar, could you please give us a kind of overview, where do we stand in terms of Islamic finance industry, but I would like you to focus on the Middle East region and more precisely the Islamic capital markets.
Perfect. Thank you very much, and it's a pleasure to be here. I think if we are to discuss Islamic finance, the starting point to say Islamic finance is actually a branch of something that's bigger, which is called the Islamic economy, which is a branch of something that could be bigger, which is the halal industry in general. So whether you're talking about food, whether you're talking about travel, or economy, or finance, it's all things that can be from day to day, i.e. your food, the way that you live, the way that you finance yourself, to the extent of your travel, leisure, etc., etc., etc. But zooming in into Islamic finance, I think Islamic finance is can be divided into 5 categories. The largest one is Islamic banks, which is around 70-75%, depending on the time that you're looking at it. The second category is actually sukuk, which is Islamic bonds, again, around 10 to 12%. And then the remaining 3%, which is takaful, i.e. Islamic insurance, Islamic fund management, which is the fund that managed with Sharia compliance, and corporates that operate under Sharia. And the last 3 collectively are a very small fraction, and the biggest one is 70%, 75%, 72% is Islamic banks. Focusing on the region, if you look at the countries and the Middle East, and let me give you an example, Islamic finance is actually part of the DNA of the actual Middle East and the GCC. So, for example, if you look at Saudi Arabia, 82% of financing is Islamic finance. If you look at Kuwait, more than 42% of the banking sector is Islamic finance. If you look at Qatar and UAE, between 28 to 30%. So that is on the banking side and the financing side. If you look at the sukuk market, recently, the percentage of the sukuk market of the total funding coming from the GCC, for example, and even other countries, if you take Malaysia, Indonesia, so the top 10 countries, is around 25%. So you cannot look at the region or in countries where you have Islamic finance and not deal with Islamic finance or look at Islamic finance, because at the end of the day, it is really part of the texture. In some cases, it's the dominant one. As I said, like 82% of Saudi is financing is Islamic finance. Actually, they issue in Saudi Riyal in the past few years only in sukuk format in Saudi Riyal. Internationally, they issue bonds and sukuk. And the story goes on from one market to another, whether you look at Malaysia, which is approaching 40%, or Indonesia that is growing, or Turkey, and the story goes on. So you can see that it is really a growing sector. And if you look even within the pandemic, from the countries that we look at, in most of them, although the growth has been impacted, but even with a lower growth rates, we saw Islamic banking still growing in a faster pace compared to conventional. There is a lot of push, and you can see that from the percentages that I've just quoted, it's really a significant part of many of these countries and systematically important. But that does not come with a tag, and that tag is a drag, actually. It's definitely more challenging. It is definitely more complex, and it's definitely less understood if you go out of its natural habitat of few countries. And I think there is a lot that we can discuss and talk about. But with this very brief introduction, I think we're setting the landscape and zooming in to the capital markets, which is Islamic sukuk mainly, or the fund management side of things, and the GCC and the Middle East in general.
Thank you very much, Bashar, for this great introduction and helping us to understand where is the market today. It's great to hear from you that things are going into the right direction, that Islamic finance is bigger and bigger with a big growth in the region, but still a lot to do in other jurisdictions. Let's now go straight to the subject, if I may. We've just seen COP26 just ended 2 weeks ago, not even. There has been at least a decision. Some may say it was not sufficient, but at least we have a decision. Unprecedented sums have been pledged to global transition to net zero emissions. So I would like to ask the question and try to get something more concrete. When we speak about transition to net zero and decarbonization targets, what is realistically achievable, and what does net zero means for Islamic capital market? And if I would like to prolong that question, what opportunities does ESG present for the Middle Eastern institution and Middle Eastern investors? Can I ask Chiara to start maybe with that?
Yeah, sure. I would like to start from what all of these pledges mean for finance and for capital markets in particular. There are a few trends I would like to highlight that they are likely to pop up in the next couple of months. The first one is we're probably likely to see a top-down approach, unlikely what has happened in Europe so far. So there has been little interest on a spontaneous basis from investors in the region so far for ESG. On the other hand, we have seen governments starting to come to market with frameworks, even with local taxonomy, to support the pledges, the political pledges, and also to create demand for investment and to create the criteria to promote visibility of eligible projects, right? So what can happen is the first few issuances might actually come from sovereigns or even sovereign wealth funds, and then we can still, in time, a spillover effect to the private sectors, banks as multipliers, but also players of the real economy. Now, how quickly the private sector will jump on the bandwagon will really depend on the level of regulation that we will see, depending on the jurisdiction, and of course, it will also depend on the incentive that some state might want to put in place. The second thing we might expect to see is a very interesting pool of funding opportunities, even funding products. So we can expect to see a funding mix that will appeal on one side to the pure and traditional Islamic finance investors community, and on the other side, the broader ESG investor community. What does that mean? The first thing that we are very probably likely to see, and we are starting to see the first initial steps in that sense, is ESG integration into mainstream Islamic finance. We will still see, though, green bonds, social bonds, sustainability bonds, and even sustainability-linked bonds in the same way we have seen in Western economies, meaning not Sharia compliant. It's interesting to see this double layer, Sharia compliant, not Sharia compliant products, but also in terms of layers, product that will invest in low carbon technologies such as green bonds, and also we probably see products such as sustainability linked bonds, which will allow an issuer to set decarbonization targets, CO2 reductions predominantly, and link that to the political decarbonization ambitions of each jurisdiction. We know that investors want to support the two. They want to invest in low carbon technology, but they also want to help the core industry of the region to decarbonize and still be meaningful before the proper transition can take place. And the interesting mix will really be on these two double layers, Sharia compliant, not Sharia compliant, use of proceeds, and sustainability linked bonds kind of products. Of course, the most interesting development are expected to come from ESG integration. I think it's still perceived as a very costly exercise in terms of compliance, in terms of paperwork, but there are synergies out there, there are complementarities, and it's probably on that practitioners and regulator will look at to start and mainstream this ESG integration element within the more traditional Islamic finance.
Thank you, Kara. I get what you said, and the push is really at the government level at this stage, and yet we have to see the development in the private sector. Probably, Dr. Abdillah, can you please comment on that? You are based in Bahrain, so what do you see there, and from the government, as Kara was saying, but also from the private sector? You are representing many institutions in the region. What is they take on that, please?
Yeah, thank you, Kamal. Let me first thank the organizers for inviting us for this very important forum. Before answering your question, I just maybe would like to compliment in two words the landscape given by Bashar and highlights one very important segment that is showing strong growth, which is the Islamic funds market, which some of research that we have and which will be published in the next few weeks shows that the Islamic fund market stood as over 194 billion by the end of this September, with 17% growth, which is faster than most of the other segments of the Islamic finance industry. And this is actually quite relevant for the ESG investing, of course. When talking about transition to net zero, I can say, globally, economies in the region, as we all know, they have seen like decades of economic development, but mostly based on oil and other sectors. Some countries like the UAE, they have started the diversification perhaps earlier, perhaps 5, 6, 7 years before, 10 years, and they are going on the right path. But what we see now, we see this movement is becoming more serious across the board in all countries, trying to diversify their economies and having clear targets for net zero. And we have seen during the COP26 a number of countries in the region, I mean, Saudi Arabia, Bahrain, mentioning net zero targets for 2060, and with having clear plans on how to achieve it. Of course, the UAE is probably more aggressive on that, and they have energy plans that have been set already in 2015 and the signatory of the COP in Paris Agreement. So I think there is a movement that is clear for now that no more doing business as usual as before is no more the case. And I think, well, talking about the private institutions, they are following in the game. If we talk about ESG, and in particular, we mention the E in the ESG, which is for environment. I think it's no more a luxury really to be taking these into account. There is, as you know, I mean, many international organizations, the Financial Stability Board, Basel Committee, and so on, are working very seriously on climate change risks for financial institutions. And this is triggering the institutions really to be taking this seriously and to see how they can monitor the investment portfolio, how they can monitor their activities to come up with, in convergence with the net zero. So in our case, with the members, we started already about 2 years ago, and we have established a sustainability working group that is working on 2 main topics that are relating to this transition and to these trends and changes. First one is working on a sustainability guide, because I think what is really needed is probably more awareness and education on how to do matters. I mean, many of the research that we do show that Islamic banks or Islamic financial institutions in general, they are very interested and have the values of the ESG into their activities. But then on the implementation side and in the practice, perhaps there is a lack of understanding and knowledge, which we tend to address with this sustainability working group. We are having a draft of sustainability guide, which will be again discussed with the members in the next few weeks and will be published by next year. The second point is on carbon footprint methodology measurement, which we work with some partners from the Partnership for Carbon Accounting Financial, and we aim to have a methodology for measuring the carbon footprint of the investment portfolios of the Islamic assets, same as is done in conventional side, to bring some more standardization. So I think with this shows really a clear commitment from the banks. There is still things to be done, of course, for the future, but it's a very good start. And I can say in summary that this issue is taken very seriously currently by governments in the regions as well as the private sector.
Thank you very much, Dr. Abdiillah, for your comment on this and how the governments are taking this transition seriously. Fahmida, you have been supporting many institutions for many years in developing those products. I would like now to make a transition to the product level. How, from your perspective, how are Sharia-compliant financing product and assets playing a role in this transition? And more concretely, how those products are funding a social impact in the Middle East, from your perspective?
Hello. I think the reality at the moment is that Islamic finance is playing a pretty limited part in this transition right now. There haven't been many deals in the market, although there have been a few. So if we look, for example, at social impact bonds, the Islamic Development Bank issued a $1.5 billion bond, Sukuk, last year to support member countries dealing with the COVID crisis. We saw IFM back in 2015 issue a sukuk to promote vaccinations. We've seen Kagamas issue a sukuk to fund social housing. So there have been these individual issuances, and as far as the green market is concerned, the government of Indonesia, for example, has issued green bonds and green sukuk. So the structures exist, and as you alluded at the beginning with your opening remarks, there is a huge amount of overlap between the principles of Islamic finance and those of ESG, and there is a huge potential. But at the moment, we've seen that the conventional market has been much bigger, has moved very quickly, and the Islamic capital markets have been slower and are much smaller at the moment. Now, that is likely to change in the next 5 years or so for the reasons that have been outlined. That as the conventional market moves much more activity into ESG, we will see the Islamic capital markets following suit. That tends to be the model. And because there will be pressure from governments and multilateral institutions, that will also encourage more products to come to the market. So the products exist. We have clearly seen how these deals can be structured. They're out in the market at the moment, but we haven't seen the volume yet that we expect to see. But you know, the UK Islamic Finance Council, for example, said that they think there'll be another 30 to 50 billion sukuk coming to the market by 2025, which fit into the broad ESG framework, whether that's environmental or social. And you know, that is a very positive development. As you know, typically a majority of investors in international sukuk tend to be conventional investors, and as a huge proportion of those investors look for sustainable projects in which to invest, the Islamic capital markets are likely to respond to that demand by going through the additional steps that are needed in order to issue a sustainability compliant sukuk. So they'll have to go through not just the Sharia compliance steps that are needed, but also the additional steps that are needed to satisfy both the ICMA principles for green bonds or social bonds or whatever it's going to be, as well as local frameworks that exist and, you know, for example, EU regulatory requirements. So there are lots of different layers of compliance that will be needed, but there is an expectation that as investors demand more ESG compliant products, the Islamic capital markets will respond to that. And the volume of sukuks that currently exist in the market that fall within this broad framework is likely to increase.
Thank you, Famida. Bashar, so Famida is telling us that we have limited issuances in the ESG space, right, for this Islamic capital transaction. So there's a huge opportunity and more to be done. What is your perspective there? How do you see things? Because you are rating, you know, institutions in the region. What are they telling you about that?
I think that's a very important question, and I think numbers speak for themselves. And let me start with that. So if I am to just speak numbers, we have around 20 billion of sukuk that has been issued in the past 5 years in an ESG sustainable related way. So when we're saying 20 billion, that is actually less than 2% of total sukuk outstanding. So it's small. If we look at that in terms of the whole conventional ESG related issuance, again, you were talking about less than 3%. So it is small, but there is a very interesting trend that is started forming. And that trend is hidden, but if you look closely, you can see it. So if you look at the region where Islamic finance is active, so the top 10 countries, and you look at the ESG issuance there, you will find that the choice, almost 60% of ESG issuance came in an Islamic bond sukuk format. So it's the dominant one, and 40% in conventional. So the choice was, when it came to ESG, it historically and in the past few years, it was actually more on the sukuk format rather than in the conventional bond format in the region where Islamic finance is active. So that's one important trend. The second trend is, and that's something that I think all of us agree on, there is a recent push from the top down, i.e., now governments are coming in and they're putting strategies, they're putting milestones to try to be more sustainable and to achieve more in that angle. And that hopefully and eventually will translate to more activities. And as that more activities occur, from what we saw in the past, it will tend to have an increase also the Islamic finance side, whether on the syndication, whether on the sukuk, whether on all the aspects in a more favorable way, because the key driver so far, and I here underline so far, so if you look at the sukuk issued in a sustainable way, the key driver behind that is actually to attract a wider investor pool. And that is key, because you need to look at the driver. The driver historically has been issuers trying to attract, in addition to the Islamic investor, the ESG-related sustainable investor. And that is a key driver that we saw happening historically. Now, with the government push, we could see more projects and more initiatives and more regulations, and I emphasize regulations, that would require more ESG sustainable related activities, and which will translate directly to more Islamic finance activities. So you can see the history in the past 5 years, we've seen growth. We've seen the choice more on the Islamic finance side, and now we're seeing the government becoming more active. All of these give us indications that we are looking at a growing segment in the coming few years.
Thank you, Bashar. Maybe Dr. Abdillah, on the trend that Bashar was describing, do you see that trend in the region? And what do the financial institutions that you represent tell you about that? What do they want to do in this transition?
Yeah, I think I completely agree with the analysis of Bashar. It's a trend that is ongoing, and I think what was happening is that this trend is new for everyone, but there is most of the time, for example, financial institutions, they see the instruments as almost already kind of quasi ESG qualified. So there is this perhaps not making much effort to go beyond and what is the conventional way doing, because all they see it, they say it's ethical, it has values. All their instruments already. But I think with, as I mentioned, with the need for more education and awareness to understand that there is perhaps some other things that need to be included, in particular in processes and in the targets for these investments, to show that there are perhaps opportunities. The other thing that I have mentioned, and I think which perhaps will show some good opportunities, is the Islamic funds as well, which has been, for maybe 10 years ago, it was something very small. 4 or 5 years ago, it was around 50-60 billion. Now it's reaching much higher levels. And I think this has the ease of making it like convergent or perhaps ESG compliant as well. Not to mention one very important aspect of the Islamic economy mentioned by Bashar as well, is that when we talk about the Islamic finance, it is seen in the region as part of the whole spectrum, which include awqaf, which is the endowment funds, and zakat, and sadaqat, charitable givings. So this whole spectrum, it plays a very important and significant role in the sustainability and ESG. We have seen for the last perhaps 18 months during the pandemic, in many countries, the awqaf and zakat, they played a very important role. Countries like Indonesia, in the region, Malaysia, or other countries, so to alleviate poverty. So it is seen from Islamic finance here as other part of the Islamic economy that would complement the activities of the Islamic banks in some cases where they don't have 100% focus on these areas where they need to take care of perhaps other businesses and industries. They see this part as complementing their work, and even through their own activities in these areas or foundations.
Thank you, Dr. Abdillah. I definitely agree with you that the ESG spectrum has to be seen beyond the capital market industry, definitely. Probably now, we've looked now, we set the scene, we've looked at the region, and we've looked at the capital market industry in the region. I would like now to look beyond the region and more focus on Europe now. Islamic finance has been existing in Europe for many years, with two countries trying to push that industry to a certain extent: the United Kingdom on one hand, and Luxembourg. Luxembourg was one of the first country in Europe, I would say outside of the Islamic world, to have Islamic institutions present here, to have pushed for the development of that industry. If we look at Europe now, and probably Chiara, you may start with that. Do you think initiatives being done in Europe, especially from Sukuk perspective, can be a viable tool for this transition?
Yeah, sure. It will all depends basically on whether this new Sukuk issuances by European issuers will be successful in unlocking capital for new sustainable projects and create this additionality that the market is talking about. Now, Europe is not the dedicated Islamic finance market. But we have also to consider that Muslim population is growing within Europe, and that a part of this population is actually only willing to invest into Sharia compliant products. And going forward, we might see this segment looking into giving a positive impact into their investment. So I don't see a reason why European issuers will not try to bring to market sustainable or green projects and channel them via the Sukuk format to attract more investors and a more diversified pool of investors. It's clearly a no-brainer, whether in Europe or above Europe.
Thank you, Chiara. Famida, United Kingdom is not in EU anymore, but is still in Europe from a geographical perspective. What type of initiatives do we see there? I know there have been Sukuk issued by the government. In this transition, in this sustainable development transition, what do you see happening in the future? UK first, and if you can go beyond UK, please.
Yes, so the UK has issued two Sukuk, as you know. And the UK has also issued green gilts to fund green projects. There is a huge demand for development in the UK. The government has a levelling up agenda to try and promote development in the north of the country, which is a political priority. And so for people like me, the idea of the UK government issuing a green Sukuk seems like a natural development and something that would help to enhance the UK's desire to be a global centre for international finance. I think they would do it if they thought that the demand was there. So it really is about widening the access to investor pools and the kind of funds that both Dr. Abdillah and Bashar have been talking about. If those funds were interested in investing in a UK a green Sukuk, would definitely then result in those issuances coming to the market. So I think there is the opportunity, the potential, and as the Islamic capital markets grow, that is something that I would hope and expect to see. And I think that the same principle really applies across Europe more broadly. So as you said, Luxembourg has issued a Sukuk before. It wouldn't be a huge jump for it to look at potentially issuing a green or a social Sukuk. One of the really interesting things that we saw during the pandemic was the growth of the social bond market, which had been relatively small before the pandemic took hold. But as governments across Europe responded to, for example, unemployment payments, support for businesses that were in trouble because of the pandemic, we saw very significant issuances of COVID-related social bonds. And, again, there is no reason why those social bonds cannot be issued in a Sharia-compliant form to create a social sukuk market, of which there is an immense need. There's a real recognition that the pandemic we've been going through has had a huge impact, particularly on the progress of the SDGs and the impact on the most disadvantaged people in the world. And so developing a social sukuk market, whether that's in Luxembourg or London or Dublin, is something that the market, I think, will think is a positive development. And those huge, particularly conventional funds that are now focusing on sustainability and social development goals, I think would be natural investors for those kind of issuances that could be hosted in European markets.
Thank you, Famida. We definitely hope these two countries will take the lead on this transition. But as you said, it's also a matter of distribution and demand, right? So the demand has to be there. Talking about the demand and the way we can benefit the demand, Chiara, you've been behind the initiative of the Luxembourg Green Exchange, right, platform. How do you think that platform can support investors in this transition and, generally speaking, and taking the perspective also of the sukuk issuances?
Sure. Well, it's very simple. The Luxembourg Green Exchange helps to cut through three very important dimensions within sustainable finance in the region, which are transparency, internationalization, and sukuk specificity. Let's start by transparency. The whole of sustainable finance has been underpinned by transparency since the very beginning, and actually transparency is also the backbone of the Luxembourg Green Exchange. So we do ask issuers to come to our platform with mandatory additional criteria of transparency, meaning we will ask them to give exhaustive information to investors on where the money is going, allocations, where the money is contributed to impact, and also in relation to target setting for some products. So overall, we try to connect the supply and the demand side, also in relation to the ESG elements of the transaction, which are so core in the sustainable finance space. The second element is internationalization. We already know that to scale up projects that will contribute to sustainability and to transition, very important amount of money are needed to the extent that the local investor space might not be enough. So we will encourage Middle East issuers to tap into a wider pool of investors going internationally, and that's where we have the market infrastructure since the very beginning of our model, which is truly international. In Luxembourg, we list 37,000 securities from issuers from all over the world, really all over the world, in 66 currencies. So international is core part of our nature, and that's where the market infrastructure we propose in Luxembourg through the Green Exchange caters for this combined transparency and buy and sell side connections in terms of broadest market possible. The last dimension is sukuk specific. We have some familiarity with listing these products. We have been the first exchange in Europe to list a sukuk. That was in 2002 from Malaysia. We have listed in this space 22 sukuk already, and we can count on a regulator which is committed to making this products understood. There has been a release of an FAQ a couple of years ago from our CSSF in which the regulator is clearly stating under which conditions a product can be considered asset-backed or asset-based, giving clarity to the market, which is basically what in most cases issuers want to hear in the first place. Commitment, clarity, and of course a strong infrastructures behind that can connect all of this stuff and cut through these three important dimensions.
Thank you, Chiara. It's very well understood that Luxembourg is a gate for the issuers to come and list their product on the Luxembourg Stock Exchange. So we're now coming to the close to the end of this session, I just want to ask a last question to all panelists. We've been talking about this transition and the convergence between the two. So try to, from your perspective, to conclude on where and how do ESG investing and Sharia compliant investing complement each other, and how, and if yes, how this important linkage could be further strengthened and supported. Bashar, you want to start?
That's a very interesting point, because I mean, depending on the way that you define ethical financing, some would argue that actually Islamic finance is a form of a modern ESG that started 50 years back, because it is based on beliefs that many people actually abide by, and thus it's a form of an ethical finance. Now, if we add to that the social dimension, if we add to that the environmental dimension, if you add to that the governance dimension, I think what the industry is really lacking is three things. The first one is to really see how best to show its side that actually relates directly with ESG and social and what have you, which is something that is maqasid al-sharia, so the value-based proposition of Islamic finance, because the industry has been busy focusing on offering the products in many ways that is similar to conventional. And I think the maqasid al-sharia, the value-based proposition of Islamic finance has been missing. And the recent trend of the bigger ESG made the industry look back and say, okay, maybe we should have focused more on this. How can we utilize that? So I think the industry is on a crossroad. If they are able to utilize that and have more transparency and disclosure to help them attract a wider base other than the Islamic investor and the Islamic stakeholders by showing their value proposition, value-based proposition, they could benefit from that. If they keep looking into this with the same way that we've looked at that historically, I think they will be again following rather than leading. And that is something that will put them at the back trend. But there is now a push, there is a realization, and there is countries like Malaysia that started talking about value-based financing and relate that to Islamic finance. Are we going to see that translated into actual transactions and substantial part of the industry? I think we started to see that in the past 3-4 years with growth, but it's still small in the grand scheme of things. It's an interesting space to watch now with the government pledging. That's a key important thing, that they want to go and pursue that more. And when the government in the countries where Islamic finance is active are pledging to that, and that pledge is translated, and if that pledge is translated, that will automatically mean higher take of the Islamic finance industry and a higher share of that.
Thank you, Bashar. Dr. Abdillah, on this specific question of convergence, what is your view and on that, please?
Yeah, thank you. Well, this is a very good and important question, and which we keep asking ourselves every day, and at board level and the working group levels. So when we talk about the convergence in principle, we see a clear convergence or match between sustainability principles, or if we look at principles for responsible investments, impact investing, with the sustainable development goals. For instance, if you take the 17 sustainable development goals, you can match them very easily with every one of the Sharia objectives, the 5 Sharia objectives. They map exactly to it. Now, when we come to how is this really done in practice, this is where perhaps work needs to be done. And at the working group level, what we are working now, we have highlighted 5 principles, which this is still a draft project. We are working on it, but we have highlighted 5 principles which we need to address to further this convergence and systematic collaboration between Islamic finance and sustainability. First is on corporate and Sharia governance, to see where does sustainability fit into this process, and it will have to feed into it from the product development to the operations and so on. The second, sustainability integration at all levels of the operations of the Islamic financial institutions, to be at the thinking process. And third, to look, of course, at the environment and the social sustainability risk and risk management, how to manage it within the process, because this will become critical to the operations of all financial institutions. And fourth, as mentioned by Bashar also, is the monitoring and reporting, which is very key and important to show how are things done, what are being done. And the fifth one, and last but not least, is on partnerships, is on building partnerships with other stakeholders that perhaps are more advanced into these areas. And in this regard, of course, we will be very happy to have any partnerships with Luxembourg and the UK in advancing this agenda forward.
Thank you, Dr. Abdillah. Maybe Chiara,
Yes.
your view on that?
What I can add to that is, of course, two different approaches will still be two different approaches, but there are a lot of complementarities and synergies already. And I think these are the synergies on which practitioners and regulators should focus to try and understand commonalities, streamline them, and come to some sort of standardization. Now, these synergies are at the level of values and also at the level of rules of how these products are structured and brought to market. Just to mention a couple in the interest of time, there is this user proceed concept that is so typical in sustainable finance that goes very well with the idea of exclusions in Islamic finance. I think the two are actually strictly interlinked and can only mutually strengthen each other. Another example I would like to give, talking of synergies, is the fact that the two systems adhere to a strong set of rules that are set externally to the environment of the issuers and verified by specific bodies. So we will have green certifiers on one side, and we will have the group of scholars issuing fatwas on the other side. I think it would be good to look at cross-references these two different systems of rules and even legitimation of these two different group of bodies rather than reinventing the wheel. Of course, the perception is still that costs are high, that compliance costs are double, that even the risk of greenwashing and Sharia washing, if we can call it this way, can just increase in a combined approach. But I think we have to start somewhere, and there will be a test and trial approach until, of course, we can go into amortizing this cost and create standardization in the interest of broader ESG integration within sustainable finance.
Thank you, Chiara. Famida, you'll be the last to conclude on that. So you said earlier the product is there, right? So what else has to be done to further support that convergence and that transition?
So I think the product is there. The last point that Kyra made on standardization is a point that is commonly made when it comes to Islamic finance, but is actually a point that applies particularly to ESG products in the market. And avoiding sort of duplicating work is really important. I don't think we need to come up with a third structure, which is just for Sharia compliant green sukuk. I think we have Sharia compliant sukuk and we have green bonds, and we should be able to combine the two very easily. Islamic finance has suffered for a long time a debate over whether it complies with form over substance, and ESG gives it an extraordinary opportunity to actually comply with its fundamental purpose of being socially useful. This is a really, I feel, almost an existential point for Islamic finance. If it can't meet the immense needs of the Muslim world by dealing with the SDGs and funding them, then it will become marginalized as we see the ESG market very broadly growing. So I think that I think sustainable finance satisfies the purpose of Islamic finance. It fits the need that exists in the Islamic world, and we are seeing an increasing need for these products going forward. So this is a really exciting moment for Islamic finance and an opportunity for it to grow hugely and become a big part of the general capital markets.
Thank you very much, Fahmida. I think we are coming to the end of this session. I think we have a consensus here, which is that there is definitely more to do to develop that market. ESG will definitely help the Islamic finance industry to accomplish its goal and answer its purpose. So, but we definitely all agree that there's a big opportunity in that space. So thank you very much for your valuable comments, Chiara, Fahmida, Bashar, and Dr. Abdillah, for your valuable comments and answers. And we will hand over now the floor to the next panel. Thank you very much.
Thanks, Kamal. Indeed, sustainable investment and finance is a burning topic these days. And in my view, if it will be structured properly, it will naturally fit in Sharia rules and Islamic finance. So good morning, good afternoon, ladies and gentlemen. First of all, thank you, LFF, for arranging this event. And I'm very much appreciated they requested me to moderate this panel, wonderful panel. I'm Zishan Ahmed. I'm the partner at EY in private equity and infrastructure practice. In the next 30 to 40 minutes, we will have a panel discussion around Luxembourg as a long-standing European partner for Islamic financial institutions operating globally. For this discussion, I'm delighted to have distinguished speakers. With me in my studio, I have Marco Lischfuss. He's an advisory partner at KPMG. From Dubai, we have Maroon Jalk, CEO at Azimuth Middle East. From Jordan, we are connected with Amar Dabour. Amar is a managing partner at Eurus Capital. Thank you, gentlemen, for taking time and be part of this panel discussion. Before we start our panel discussion, I would like to involve our participants in this discussion by asking a polling question. You can see the polling question on the screen. Yeah. So is there a business case for Islamic banking and asset management in continental Europe? So you have three options: yes, no, not sure. So you have the guidelines. You can see in your screen the guidelines to choose your option. So please feel free to choose your option. We will discuss the result later on in this panel discussion. Let's start our discussion. Middle East, as we all know, is a big actor, big investor in Europe. We have seen in past and we see in present, and we are expecting the same thing in future. Middle East is also a global powerhouse for Islamic finance. Different countries in GCC are very active in that. So the first question to my panelists, how you see the relationship between Luxembourg and the Middle East, particularly when we see product structuring like funds, like investment platforms, like acquisition in Europe. Maybe I'll start with Marco. How you see that?
Well, I think right now we are relatively strong in the relationships on product structuring, etc. But in some ways, if you look at where is Luxembourg really strong, so Luxembourg is really strong in all the domiciliation structuring of investment products, but Luxembourg is also very strong in the corporate and institutional banking. It's very strong in the private banking, and it is also a very good platform from which to operate retail banking. Now, if you look at structuring right now, a lot of the products that we structure are then distributed more back to the origins where they came from, where the traditionally the investors would sit when it comes to Islamic finance, at least. Now, Luxembourg offers everything you have to offer in terms of being a strong market that also allows you to distribute and structure other products, more like the corporate banking type of products, trade finance, funding of investments, etc., through the Luxembourg market, and distribute it and raise funds within Europe. And I think that is where today we are still a bit behind in people recognizing the potential that we have here in Europe and here in Luxembourg to structure these products that we have and distribute them through the other avenues. And there we need to encourage people to come and see and tap into this potential that exists in Europe, from which Luxembourg is a very good platform to start from. And this has been recognized by a lot of international players that use Luxembourg as a platform, especially for corporate and institutional banking and for wealth management.
Thank you, Marco. Maybe I'll go to Dubai. We have Maroon sitting in Dubai. How you see, because you are running a European-based asset management business in Middle East, you know European regulation, you know the dynamics of the market. How you see this relationship between Luxembourg and the Middle East?
Yes, hi Zishan, hi everybody. Well, yeah, as you said, we're operating in the Middle East as an international and European, actually, asset manager. And the bulk of our investment products that we bring to investors worldwide are domiciled in Luxembourg, which is our product factory or the product hub, if you would say, primarily in UCITS funds. So here in the region, our major success so far has been in the Sharia space, offering an Islamic Sukuk fund to our investors in the GCC. And this fund, again, is obviously under a Luxembourg domiciliation. And the way we've seen it is that, first of all, I would say that the UCIT environment or framework is familiar to the investors in the region. So there is no need to go through lengthy explanations about what a product domiciled in Luxembourg means in reality. And there's also another aspect which I think is important. It's the fact that there is mutual recognition between regulators, which means in effect that it is relatively easy to succeed in registering with GCC regulators or central banks, depending on the countries, a product which is in Luxembourg, and to be able, starting from there, to offer it to various investors or also to distributors where a significant share of the market is.
Thank you very much, Maroon. Amar, you are working, yes, you are in Jordan now, but you are working from Luxembourg, and you know, and you are making bridge between Luxembourg and the region since long time. How you see the relationship between these two jurisdictions? There is appetite, but I just want to listen how you see this relationship.
Yeah. Good afternoon, everybody. So I think from my point of view, the relation is already established between Luxembourg and Middle East, you know, and we've seen this by the different funds hosted in Luxembourg and the Sukuk listing also for years in Luxembourg. And Luxembourg, you know, show its appetite to develop the Islamic finance business in Luxembourg. I think that the challenge now is that the business line between Luxembourg and GCC is there. We know that. Middle East, it is existing in Luxembourg. The challenge is how to increase this business line, how to generate more volume and to attract more clients from Middle East to Luxembourg. This is the most challenge. And from my point of view, this go by developing the ecosystem that will serve the industry of Islamic finance.
Thank you, Amar. Maybe we can have a result to our polling question. We will discuss with our panelists. Interesting, interesting. So majority of the people are saying, even not sure, they're not sure. So majority are saying that there is a potential of there is a potential for a business case for Islamic banking and asset management in continental Europe. Any first impression, Marco, on this result?
Well, personally, I'm very happy to see this, because this is I'm a strong believer in this, and I've been proposing it for years, and I think I completely agree with what Amar was saying, actually, that we have a very strong business case. And going to the previous panel and a bit looking at social investing, etc., responsible investing, if you look at the Sharia compliant investment, there is a very, very strong overlap between the two. And so not only do we have a business case here, if we do it right, to actually tap clients and on both sides of the equation, on the asset generating, the sales side and the liability side, the asset and liability side of our banks. But we have a large potential to tap the existing Islamic Muslim consumer base, but with the increasing sentiment around ESG and all of that, social responsible investing, we have a lot of demand that's pent up in our new generation, in a lot of people. And I'm not just talking about institutional investors here. I'm talking about the next generations that are putting a much more emphasis in that. And we are satisfying that demand with the products that we have in Islamic finance. So by putting the right ecosystem, as Amar said, the right infrastructures, banks, private banks, asset managers in place, we can really tap this market. All we need is somebody who has the will and to go and say, be the first one, do the first step. And I think that's what we've been struggling with. And Amar and I know that very well. We've been working for years together on this, is to find somebody who's willing to do that first step and go that step further than just a safe bet of structuring something here and taking it back to where we know the investor base is, the client base is, but actually trying to tap into the base that we have here. But that, of course, requires us to build that infrastructure here, that ecosystem here. And that includes building banks, building distribution networks, building insurance networks, et cetera, to distribute those products.
Yes.
So I'm very happy.
Maroon, how you see this result? It's very encouraging for me, and I think all of us. So how you see that sitting in Dubai, such a good, appetite?
I think it's not necessarily a big surprise for me. If we look at the product aspect, I'm not talking about more services like banking and insurance, but from my perspective as providing products to investors, you can see that out of our billion and a little bit more than $1 billion in our flagship Sukuk fund, about 20% are currently invested by European-based investors. So this is the results of the poll are not necessarily a big surprise, as I was saying, because we've already seen this kind of appetite. Now, we need to put a little caveat on that. The bulk of the investors did not come into the fund because it was an Islamic or Sharia compliant fund. They came into the fund because they also saw that the Sukuk space can be a standalone, I would say, investment asset class, which brings a different exposure geographically to certain emerging market issuers, and which in the environment where we are operating also brings a higher return as opposed obviously to issuances that you might have in Europe and which are made available for them, or even actually issuances that you can have in the US, given the suppressed environment for interest rates.
Amar, quick comment on the result?
Yes, I'm happy on the result. I'm not surprised, but happy to see it. I mean, because we know the answer, and we know this kind of result for a long time. You know, we thought a lot about how developing Islamic finance in Europe. So I'm not surprised by the answer. You know, we met a lot of institutionals in Middle East, and we asked the question, why you don't come to Luxembourg? Why you know Luxembourg and you know the expertise of Luxembourg, but why you are not coming to Luxembourg? The answer was always the same, that the infrastructure is not built yet. So by having this infrastructure, we can definitely attract more institutional from Middle East. But also we have to look at the local market, the European market. The demand is extremely high for banking and different Sharia compliant services. So I think it's logic that you have this answer in your questions, so that most of people see business case in Europe, because I think the demand is really there. And yeah, it is something we should work on it in the future.
Thank you very much. I think Marco has touched base on this social, responsible, sustainable we have discussed in the first panel also. And we in Europe see that a lot of institutional investors, they are allocating more money for socially responsible investment, SRIs, impact, and these type of products. In my view, being a practitioner and Muslim, I think Sharia rules can easily fit within these ethical or socially responsible thesis. How you see, Marco? Because we see in Luxembourg a big increase in SRIs investment. How you see that this can be business case for Islamic finance also?
Well, I think it comes back to it again. What Maroon was saying is what we have today is, yes, we have some investors that we attract, for example, here in Europe. And mostly we attract them because we expose them to other assets in other geographies, higher returns, etc. But there is a lot of demand as well for generating both raising the capital in Europe and then again in distributing those products within Europe. And I think SRI and all its impacts are one of the big drivers behind it. And as you said, I completely agree with you. Islamic finance and SRI are, let's say 95% overlap. So there's, as opposed to something that was mentioned in the previous panel, I don't think we need to put a new structure in place to do it. I think it's relatively easy to get them to overlap completely. And I think that is the secret of it. We need to really explode this market. We need to raise the capital in Europe with European assets, competing with conventional finance, but adding that label on top that reassures our customers that this is ESG, SRI compliant, and then distributed again in Europe. And I think there's a huge untapped market here, and Islamic finance could be the right catalyst, to bring this to bear. But again, it's not enough to have the products, and we have to have the infrastructure that distributes it. Because in the end, if I distribute a Sharia compliant product or an ESG compliant product through a channel that I'm not so sure about that it satisfies all my requirements, then I'm probably more reluctant to invest in it than if I have an ecosystem which itself is based on respecting all of these principles.
So it means that there is a shift, or there is a need for a shift from market strategy, from distribution channel, from mindset. I think first of all mindset from the asset manager as well as from the investors.
From the investors and from the people that operate, if you want, the nuts and bolts, the factory, the bank, the insurance company that actually distributes. There has to be a whole ecosystem around it. And I think that is, if we manage that, then there's so much demand in Europe pent up based on SRI principles and Islamic finance principles put together that we would see an explosion here. And I think the risks of somebody going ahead and being the first one to put this in place are very, very low.
Okay. Maroon, how you see that? I think this is, we discussed in last session, we discussed in a keynote speech also, world is talking about socially responsible investments. How do you see Islamic finance a bit of in this sector or in this thesis?
Well, I mean, it's obvious, especially on the equity side, that the overlap between Islamic investments and ESG is significant. I think that the two main differences would lie into the debt proportion, which is more constrained under the Sharia Islamic rules. And on the other hand, on the ESG side, I think that maybe there's the governance aspect, which is maybe less discussed into the Sharia regulations. But obviously, I think, as Mark said, there's about 90-95% of overlap, and definitely there is a gain to be made in terms of awareness of the Sharia products to put forward and to work on that aspect to make it more visible or at least more known for various investors, obviously Sharia investors, but also the conventional investors who maybe don't realize today that there is this interesting overlap between the two, I would say, regulations.
How you see, Amar, this topic?
Marco and Maroon said all, but I said today, you cannot pretend being doing Islamic finance without being ethical. I think this part of being ethical and socially responsible is not well known by the public, and this is one point where we should, as practitioners, work on it, is to educate, I think, public about this aspect of this kind of finance. But again, it's a young finance, and the only booster for this topic is to have the ecosystem and the different institutions that will market their product and highlight this social impact or economical impact or ethical side of their product. So this is important to have those institutions that will market those important points. But yes, you have to be ethical if you want to play Islamic finance.
So it's more about creating the awareness to educate the market, to take it to the next level, so that this market could go to the another sector which is more burning this in this time.
Yeah.
Okay, I think anything more, Marco, or we can move to next topic. I think the next topic, which we need to discuss within this panel, is what are the challenges we are dealing business between these two jurisdictions. What are the major challenges of doing business? Is it perception or legal or regulatory requirement? Because I think this is also very important. Cultural and social matters, or expertise, Islamic finance ecosystem we discuss, or the infrastructure which is not here in Luxembourg. So how you see that? Amar, I will start from you. How you see that? What is the barrier? We still, Islamic finance is a niche market here in Luxembourg, but we need to be very clear. What are the challenges?
The challenges, I mean, if now we will focus more on doing business with Middle East. Perception is very important. You have to keep in mind, and always when you deal with institution or people in general, how people look at you. From Middle East, Luxembourg is Europe. So just to understand the perception they have, for them, Luxembourg is Europe. This is something we have to face when we go and present Luxembourg and try to attract a client to Luxembourg, institution to Luxembourg, to say, okay, Luxembourg is Europe, but is part of Europe, but there is different country and different philosophy and politics and so on, and we have to explain this to say that each country in Europe has its own identity and its own philosophy. So this is always the first barrier we have to break, which is the perception. Always, everybody look news and they hear the same news about Europe, and this is the perception they have at the end of the day. So when you talk about Islamic finance, everybody thinks that Islamic finance is not welcome in Europe. This is the perception. And it's a commercial challenge, we have to. However, everybody knows Luxembourg, and everybody recognizes the expertise of Luxembourg and the vision of Luxembourg, and that's very, very important. When talking about Europe, and focusing more on Luxembourg. So that's a very big advantage we have, is that we are very well qualified as experts in the financial business. and this is very helpful. So the perception, the global perception sometimes can be wrongly seen from Middle East, but our job is to make things clear. I mean, as a commercial, this is your job. However, Luxembourg has a very good reputation in terms of expertise, and sometimes it makes things easy when you highlight more Luxembourg in Europe.
Marco, how you see that?
Yeah,
it's very challenging question.
It's a very challenging question. I think the perception really is there, but I think the perception that Amar was referred to, that people always hesitate and see, is Islamic finance really welcome in Europe? I think we also have to see the positive side. Luxembourg is in Europe, and from Luxembourg you can serve the rest of Europe. So that's one thing, but I think the perception, yes, there is some reality behind it, that especially in recent years, there has been a lot of bad press around the word Islamic, and you know, with all the misunderstandings this carries with it. But let's not forget, let's come back to ethical, let's come back to socially responsible. That is the marketing platform to go for. And that is something that everybody in Europe likes. And when that, at the same time, satisfies also Sharia ideas, well, the better.
It's a good merger.
It's a good, exactly, it's a good complement. Yes. So I think that is one of the perceptions we really need to address, is that these products are welcome in Europe. These banks are welcome in Europe. These people are welcome in Europe. And I think from a legal and regulatory point of view, especially Luxembourg has some big advantages vis-à-vis other jurisdictions. We've put in place a framework, a legal regulatory framework that accommodates this, that accommodates socially responsible, that accommodates Islamic finance. And we've shown it. I mean, we've issued our own sukuk, etc. So it's all there. That clarity is there. So I don't think that is an issue. I think from a culture and social barriers,
not exactly.
Not
we
exactly.
are very diversified.
Especially in Luxembourg. Look at us,
156
nationalities living together.
This should not be a barrier.
No,
this should not be a barrier, especially if you are in Luxembourg. Maroon, how you want to add some color on this discussion?
Well, I mean, I think it's very difficult to add anything to what has just been said. It all makes perfectly good sense, and I agree with everything. I think there's just one topic we haven't mentioned, which is simply the harmonization, working on the harmonization of Sharia rules. I think that for some European conventional players who want to, at a certain stage, address the Sharia space, some of them might feel that they are getting a little bit lost or a bit afraid that some Sharia structuring might not be acceptable everywhere. And I think that the good news is today that there is more and more harmonization in that space coming from the GCC, primarily driven by Bahrain initially, and now also pushed by the UAE Central Bank. And from here, I think that there is a ground also to have a dialogue between Luxembourg regulators and other bodies around how to make these rules more clear for conventional or investors in Europe who want to look more into the Sharia space.
Amar, how you see that?
I think, we can, that's true. You need to harmonize Sharia compliant rules. But by building a business case in Luxembourg, I think you can be a benchmark, and try to answer. We all, each market has a kind of client which follow more this schools or the other school. So first of all, you have to know a very good knowledge of your market and of your client typology in order to set up the right regulation to your Sharia compliant product. Yeah.
Okay. Yeah.
But you can be a benchmark, definitely.
You want to add something?
Maybe Maroon, an excellent point, by the way. I think one of the things, and I had the privilege to work with some of the regulators in the Middle East also in implementing Basel rules and Islamic finance rules. And I think generally speaking, how regulators look at it is they look at, for example, the Basel rules for a bank or whatever equivalent rules, the international rules for banks, for asset managers, etc. And then they say, for example, EIOPA rules, etc. They're an add-on. Okay. So you basically start from a basis that everybody has to require, and then you have to add on those additional rules. And here I completely agree that harmonization is very much key, because in the end, you don't want to be the one that suffers in your own economic performance as an operator of these institutions, because you have additional costly rules on top. So the more you can harmonize them and the more you can make them easy to integrate into existing regulations, the better you are positioned. Because in the end, the customer out there is only ready to forego so much economic performance or pay so much more to satisfy their own conscience, if you want. And here, though, you also have now with the regulators coming and actually asking banks to, I'm talking particularly about banks now because they're more advanced in that in some ways, asking them to really do something about ESG and integrating it into the regulation. Well, haven't you already integrated some of those ethical and SRI components from Islamic finance in the regulation today? So the add-on has been hopefully reduced a bit.
Okay. No, last question, I think, is a bit local question. So we all know Luxembourg is a well-recognized marketplace for financial sector. Particularly our UCITS and AFM brands are well-established products in their respective sector. We have seen significant activities from Middle East actors, especially from sovereign wealth funds, a lot of family offices. They are using Luxembourg, like we saw and we listened to Maroon also. They have UCITS in Luxembourg. And even in Islamic finance, we have very successful record to some extent. How you see this journey, Marco, and what are the attributes to this success? It's a Luxembourg recipe, and how we attract business, how we develop business and market. How you see that?
Well, I take parallels with other businesses, conventional business. In the end, it's about offering the right mix. And here's something where Luxembourg is particularly well positioned in Europe, in the world. And it's what we always tell our clients, for example, is, well, first of all, you're in a country that knows you come here to do business across Europe. Now, you have a lot of the larger countries, that's not their first reaction. So we are very open to cross-border business. So that's the first thing. The second thing is we have, as we mentioned before, as I mentioned shortly, we have all the capabilities here. We have, whether it's in audit, whether it's in consulting, whether it's lawyers, whether it's any kind of the support infrastructure.
Yeah.
Exactly. All the support infrastructure around the financial services industry is familiar with all the European regulations because most of them come from those countries. They speak the language directly. No need to translate anything. So it's a very international hub. And it used to be that probably the only other hub that you had in Europe that was similar was London, but that's now outside Europe. So it only leaves Luxembourg. And I think that is something we've built here, that whole infrastructure, that support from a government that is very much supporting these initiatives. I think that's the real competitive advantage we have here. And you have the selective opportunity to go from here where you want and build your business cases in the individual countries as you see fit.
No, I think I'm from outside. So what I feel that Luxembourg location is ideal. You have good connection to major hub in Europe. We are onshore. I think this is one of the major points. We are onshore, yes. And at the same time, you have EU regulations, you have passport, which can be used for your product distribution and management. So yeah, that's true. Amar, how you see that? We have the success, we have the long journey. How you see that, and what are the major attributes? You are part and parcel of this journey.
Yes, I hope, and I will continue to be part of this journey. I hope so, of course. So yes, I strongly believe that we can still improve Islamic finance in Luxembourg. Definitely, for me, and I think all people who knows me, and Marco, you know very well, we worked a lot on the subject. For me, there is one key step for the development of Islamic finance is to build an Islamic bank in Luxembourg, to have the ecosystem from a technical point of view, I mean, and not by having isolated expertise, right and left, but to have one stop shop who will be called an Islamic bank and who will do only this. I think this will strongly develop the Sharia compliant business and also attract major institutions. That's what I believe, and that's also the feedback I have from the market during my different trip. This is one point. Second angle is to look at the European market. You can cap by having the ecosystem that I mentioned. You can cap a big part of the public saving in Europe owned by, I would say, Muslim client, niche market. But you can also be clever and go beyond of this niche market by saying that, okay, this is Islamic finance, but it's not only for Muslim. It can be suitable for anyone who want to do ethical, clean finance, I would say. But this is another challenge, but a nice challenge to do. So my conclusion is that, yes, we definitely need the ecosystem, and this will be a big booster to the development of this industry in Luxembourg, from my point of view.
Thank you, Amar. Thank you, Amar. Marco, how you see the toolkit? Last question. How you see, because you are advising client on regulatory, consulting business, you know the regulation very well. Do we have a toolkit which can satisfy, different governance model in Sharia or Islamic finance, or selection of assets, or leverage? These are the burning topics in this sector. How you see the toolkit?
I think the toolkit is there. I think where more of the challenges are is the assets themselves. So if I look at certain investments you want to do, is let's take a real estate investment. Let's take a commercial real estate investment. Are the tools there to make sure that every revenue in there is Sharia compliant?
Yes.
If I have the non-halal butcher shop in there, how do I exclude it? So it's more about the devil is in the detail, as they say. So I think it's finding the right assets that are suitable for this, where the challenges are. But the toolkit is there. The toolkit accommodates any kind of investment. It's very flexible.
Flexible. I think you can fulfill the basic requirement, and then you build your case. So
it's about the things around to ensure the monitoring and the consistency with the requirements of Sharia compliance or SRI or ESG compliance.
Then I ask myself, if all is good, why we are hub for global banks, insurance company, asset manager? Why we don't have the Islamic bank yet in Luxembourg? You are pushing hard this, and what is the reason of this?
I come back to what Amar said. I think it's more the people that actually need to be behind these investments to start this kind of enterprise, this kind of endeavor, are hesitating. There are very simple, good opportunities going in proven markets, and investment goes first in those proven markets. But as we know, buying market share is more expensive than actually building your own. So, and building a no niche, a USP within the market that can generate economic returns, it's much easier. But I think that's today, it's the perception. Are we welcome in Europe? Will it be successful? And I think we need to work on saying on that perception, and it comes back to what we said before, yes, there is an absolute opportunity to build a USP here, a unique selling proposition, and generate economic returns.
Thank you, Marco. Amar, last words.
Yes, I would say to answer to this question, Zishan, why they would come to Luxembourg, why a bank would come to Luxembourg. This is a very important question. I think, you are talking about banks that are doing very well in their local market.
They will come to Luxembourg because I'm living here.
No, but you're talking about banks that are doing very well in their local market. They don't feel the need of developing to new country, new areas. Coming to Europe for them, they have to think about the business model they want to do. Private bank, retail, everybody thinks to retail by default, strangely. All banker thinks to the retail market by default. However, when you think about retail market, you have to consider a very huge investment for any bank. Why? Because you know that the basic product are financing, and you will go to house financing. The demand for house financing, Sharia compliant, of course, is very high in Europe. So that requests a huge investment. So for them, the road is not very clear for coming to Europe. I'm convinced that the work will be an internal work if you want to see an Islamic bank in Luxembourg. or in Europe. It will be an internal job.
Thank you very much. We are already late, few minutes, so I will close the discussion here. Thank you, Marco. Thank you, Amar. Thank you, Maroon, for joining this panel. I really appreciate and to make this discussion more constructive. Thank you very much.
Thank you.
Now I would like to welcome His Excellency Robert Lohr, Ambassador of Luxembourg to the United Arab Emirates, for the closing remarks. Welcome, Mr. Ambassador.
Hello everyone, I hope my microphone works. A very warm welcome to everybody, especially to those who join us from wintry Luxembourg. I understand you're expecting snow, and a good afternoon to the rest of us here in the Middle East. Special thank you to LFF for this opportunity to join this very interesting exchange on Islamic and sustainable finance. And congratulations to all of you for these very stimulating and informative exchanges that we just listened to. I'm going to take you to a different world. I'm going to take you to Expo 2020 Dubai, and especially to the Luxembourg Pavilion, where we are, amongst others, connecting minds and where Luxembourg is showcasing its virtues and qualities thanks to its magnificent pavilion. So, indeed, now it works. Excellent. We, a picture speaks much more eloquently than I can ever. This is the Luxembourg Pavilion at Expo 2020 Dubai that you're looking at. We have invested a lot of care and attention into our pavilion, and I think the result is there for all to behold, and we are very proud of it. The Luxembourg Pavilion is situated in the Opportunity District, and it is reflecting a Möbius strip, or a ribbon, an infinite shape, which is symbolizing openness and dynamism. I think two qualities that I will highlight later on as well. So the visitor to the Luxembourg Pavilion, and I hope that you will all be able to come and visit the pavilion one day, takes you through a carefully orchestrated scenography, highlighting a number of aspects of modern-day Luxembourg. And one of those is diversity. Nearly 50% of people who live in Luxembourg, for instance, are a very multilingual society as well. We speak an average of, and I always find it strange, but an average of 3.5 languages per person. And we are a very open society. And this was a question that was during the last panel, how welcome will you be in Luxembourg? And I may assure you that, yes, you are very welcome indeed in Luxembourg. Luxembourg is also focusing on connectivity. You're all aware that we are not only in space and telecommunications, in radio, television, and satellites. So connectivity is something that is very important to us, and connecting people, of course, as well. Luxembourg also, and this was part of the debate that you had, is very focused on the sustainability efforts. We believe in a circular economy. It is something our government is expanding on and promoting. We also believe in rising up to the challenge of global warming, and we draw upon the tools that are available in the International Financial Center. That is why we discussed just now not only Islamic finance, but finance. And Luxembourg has a number of tools that are there to make this come true. I would be amiss if I were not to mention, for instance, the Luxembourg Green Stock Exchange, which celebrated, I think, its fifth anniversary recently. Of course, Luxembourg is very entrepreneurial. We have been quite successful in steel. We are now turning our eyes to space mining. And here you can see a picture which is paying homage to the raw materials and the know-how that has gone into, for instance, the building of the Burj Khalifa, the glass and the steel that was produced in Luxembourg and made the construction of the Burj Khalifa come true. And of course, Luxembourg's natural beauty. There. I go down there regularly whenever I'm there, even in a suit and tie. So Luxembourg and its pavilion at Expo have a lot of things to offer. And I would invite you strongly to all come and visit us. And, we have been successful. It was voted one of the coolest pavilions to visit at Expo 2020. So book your tickets now, if I may say. Another asset that I can count upon, and you also may rely upon, is the team of the Luxembourg Embassy and of the Luxembourg Trade and Investment Office here in Abu Dhabi. They are at your disposal. The embassy has been established 10 years ago. We've recently marked actually the 10th anniversary of the establishment of our embassy on the 20th of November. And we are hitherto still the only diplomatic representation of Luxembourg in the region. My colleague, my deputy and also executive director of the Luxembourg Trade and Investment Office, Loic Bertoli, who's also listening in to this exchange, is at your disposal. So are the members of his team. And you can join them under ltio.abudhabi in one word at mae.etat.lu. The Expo 2020 is more, though, than a simple pavilion or accumulation of pavilions. I mean, it's also the economic missions that we organized to the region and specifically to the Emirates. Over the 6 months of Expo 2020, we have a number of very high-level ministerial visits which will come to the region. They have been focusing on ICT, on space, on SMEs and on tourism. The next ministerial delegation which we will welcome will be focusing on digitalization. Health tech, of course, is another one, as our sustainability. And of course, finally, food and beverage in the context of a fair here in the Emirates. This intense program has been set up with the help of the Chamber of various stakeholders in Luxembourg, who are in charge of promoting Luxembourg and its economic interests. It is a very ambitious and vast promotion program, and a keen interest of the Luxembourg business community for the UAE in particular, but also for the Gulf region at large. Since we are in a financial context in this exchange, let me also highlight the recent visits from colleagues from Luxembourg for Finance who have been here in Dubai, I believe, for the World Alliance of International Centers. And of course, there was also a recent visit of the Luxembourg Stock Exchange. And we are also expecting Minister for Finance, Minister Gramegna, to join us in January 2020 in order to celebrate Luxembourg Day at the Expo 2020 on the 23rd of January 2022. So overall, we consider Expo 2020 an excellent opportunity to connect with economic operators here in the UAE, with a potential for cooperation, given our shared ambition for innovation and pioneering new technologies, also new financial technologies. Consider, of course, Expo 2020 a platform to connect the wider region and the world at large. After all, Expo 2020 is a truly global event. So with that, I formulate a big thank you to all of you for your very kind attention, and thank you also once again to the colleagues from Luxembourg for Finance for giving me this opportunity to be part of this very instructive Middle East. Thank you very much.
Dear Ambassador, thank you very much for your final and kind remarks. Ladies and gentlemen, I thank you for your attendance and hope you had an interesting conference. We hope to see you again on 15th of December for our final Focus On of the year, Focus 2022. Till then, stay safe. Goodbye.